Good evening, this is Nick Inman from VolumeProfileTrader.com on Saturday, February 18th. And first things first, thanks for giving me a few days away from doing the videos. It was much needed, had to get a few things done. And, every once in a while it's good to take a break from what you're doing and regroup. So, anyways, into the market, the S&P closed nearly on the highs of the week, continue to roll higher, and that's good news. It's pretty easy to stay long this market so long as you have risk defined, and I think that's the most important thing. And looking at the S&P, you can clearly see every time we've had some type of sideways consolidation, it's been an opportunity to get long rather than take profits. So sometimes you just have to let the market do what it's going to do and sit back, relax, and enjoy the ride higher. If you try to micromanage your account when the market's in a defined uptrend, not necessarily saying you'll do, you still won't make money, because you probably will, but you have the tendency that, you look back in hindsight and basically say, oh, I should have held that position longer. It continued to ride up. I don't even know why I sold. Maybe the thought of it's gone high enough, and it's just funny to say that, because what is high enough? And so far, where we are, clearly, we could be at a potential topping point, and I'll show you why, and it has mainly to do with the US dollar. But at the same time, it also could spur more upside buying. So the point is, we're going to see a move sooner or later overall in the market. And I say that with, for example, I see it with gold, silver. Oil's already starting to move, but the currencies also, dollar, euro, and some other risk currencies. There's going to be some type of move in the market, and if it's negative, or I should say US dollar positive, it's probably going to lead to a pullback in equities, which should be looked at as a buying opportunity. So the S&P 500 continues to make its way higher, looks good. If you bring up an intraday chart, this is just a 30-day chart. We have what's left of January's volume profile chart and February's, and then I have the 30-day composite on the right. You can see the most important level was still 1308 for the past 30 days. We're pretty far extended from those levels. However, in February, if I zoom in, you can see we definitely formed a range from 1335 or so on the downside up to 1350. Pretty tight range, but this 1342 level or so was perhaps the most important. It was the heaviestly traded volume price, the point of control. We've formed a base and then had a huge ramp up through those levels, straight to the back to the top of the range, consolidated, and continued its push higher. So the S&P looks great, and it looks like it wants to try to go higher. NASDAQ, similar picture, although it looks like the path has been steeper for the NASDAQ. Basically, look at this trend line that's formed since the beginning of the year. So long as we stay above that, there's no reason to sell. And if you want to look at the intraday chart, it's not as strong as the S&P. We have maybe a potential double top. I'm assuming that's because of Apple. And what I'm really looking at is to see if these levels are going to hold. And if they do, then all's good, and we should continue to ride this higher. However, if it starts rolling over, then you start looking at downside targets, and you don't want to be looking at downside targets when you're holding a lot of long positions. That's a key recipe to lose money or lose out on profits. Apple, in consolidation, it would only be fair to look at it in this time frame, and you can see basically 505 or so on the upside down to 500, and then below that 495 down to 491. Those are your two ranges you want to trade off of at an Apple, or at least watch them if you don't want to trade in such a tight range. Amazon, I'm believing that Amazon's trying to make a bottom, and I don't have a long position. I've traded this name both from the long and short side. I think 3 or 4 times. I've had 3 or 4 positions in the last couple of months in Amazon, and they've all been profitable. What I'm really looking for is long on Amazon. The reason why is I bring the 30-day chart over. Point of control at the bottom of the range. You have a little bit of resistance at 184. Point of control from February. But if we get some type of pullback and another strong bounce like we've seen the past few days, both on Thursday and Friday, there's no reason to believe that Amazon can't take a leg higher and push up towards 195 again. SanDisk, I'm not sure if this is a great opportunity. I don't know a lot about the company. However, if you want a defined risk trade, these lows that were back in early February, around $45 or so, you can clearly define your risk, and you have a target up towards basically the low 50s, and the opportunity, truly an opportunity, for a continuation higher off of these lows back in the summer months. So I would keep an eye on this. 30-day chart looks just as promising. Point of controls for 2 consecutive months at the bottom end of the range. All we are looking for is a continuation of buying, really a clear above 49 or so. So this is your plan. On a dip, look for the buyers to come in, and if they do come in, go ahead and buy some. And if the position starts to work and starts to break out to the upside, really heading towards 50, you know you have a winner on your hands. So that means you can move your stop to break even and see where it takes you. Intel, I just wanted to point out that this is a continuation higher. Remember, Warren Buffett came out, bought this. Obviously, the dips have been great buying opportunity. We bought the dips, we rode it. I'm now out of Intel, so I really don't have much to say here other than I wish I owned it still. IBM, don't take your eyes off of this. I wouldn't be surprised if this heads higher. One thing to show you, this 190, 191 level, it's been support. It's the point of control for the last 30 days. Remember, you can define your risk that way, and if you want to place a stop right under those levels, you can, and all of a sudden, you are buying a stock that is at the very top of the range, but you have defined risk, and you can basically expect a breakout, and then once you get that breakout, put your stop to break even, so at least you ensure you don't lose any money on the trade. PriceSmart, this is coming out back to the point of control. Pretty heavy selling pressure. Look at the volume, it's above average, that's for sure, but I think you can define your risk here. I think you can place your stop. You can either place it below Friday's intraday low, which is bouncing off February's point of control, or you can give this thing a little more opportunity. It could easily come back down towards 66 or so and still give us a bounce. So maybe start scaling in and realize that you can keep a stop in the mid-60s and you'll still be okay. Let this give an opportunity to work itself out. We are trying, right now it looks like a falling knife, and that's why it's kind of hard to buy. But at the same time, off the point of control, this could easily skyrocket up towards 80. Chesapeake finally got our breakout. We were looking for this. This has been my biggest position as of the last couple weeks. I've continued to build a position on the buying call options out in the summer months. I took profits on some of those on Friday into the strength. You gotta love owning a stock from 22 or so, and then in a couple days it's up trading towards 25, bottom of the value area for the year. That's an easy one to take profits on. There's no reason. Continue to ride this. There's no reason to take profits on everything. However, given the nice pop it's had, it's still in a downtrend. We could easily see some type of pullback. Earnings are coming up. I believe it's Monday or Tuesday that they come out. That's just something to be aware of. Devon Energy, this was another name I was playing. I caught this on, let's see, the 14th, and I wrote it into earnings that morning. Earnings came out. We have a nice pop. I sold it. I had some call positions that expired in March. I sold them for a double, and then what I did was initiate a 75 by 80 call spread. I'm looking for this thing to keep running up towards the value area. There's no volume here to stop it. So, looking at the intraday chart, we have huge volume, 74, 75 or so. Would love to see it stay above there. However, if it doesn't, maybe that's a reason to stay on the cautious side and realize the potential for a pullback. And a decent pullback, 5%, could be very possible. Halliburton bouncing off the point of control. I'm long Halliburton, long some calls, and I think it's worth being long. However, dividends coming up, that's something to be aware of, although it's not any significant of a dividend. I would still look for a move up towards 40 on Halliburton. I see no reason why it can't make a move up to there, especially after the past 2 days, which have been positive. What we've seen is sideways. Let me zoom in. We've seen sideways consolidation, a bunch of red days, and we saw a breakdown, continuation of red days, but we have diminishing volume lowering. That's good news. Below average volume. And now we're getting a bounce with pretty good volume, not as good as the last day of selling, but you have pretty good volume both days, and you can easily define your risk below the lows made on the 16th of February. Johnson Controls covered this back in the mid 30s. We're seeing our breakout. Continue to ride this. I would be looking for $40 as a price target, maybe more towards $39. Regardless, you still have $4 more. That's probably worth it. Would I be buying here? It's tough to say yes. However, you can nibble and buy maybe a fourth of a position, and then on weakness, look to add. Tech Resources, I just want to mention this is at the bottom of the value area. We have good volume at $38. I think we're going to get a bounce here. If we do, I would expect to move back up towards the mid-40s, these recent highs. I'll bring up the 30-day chart. We have point of control for the last 30 days on our side. February's point of control on our side. And really that's setting up for a decent move or a decent opportunity to the upside. One thing to say, I would be inclined to hold Tech Resources for a move up towards 50-52. Freeport, this is just a lot of people have been talking about it on the recent pullback. I do believe that there's more pullback potential in Freeport. Would love to see $40. And if that's the case, that's where I would be looking to pull the trigger. The reason why, $40, a little bit of a psychological number. And also we have good volume support and the value area low on Freeport. So that matters. Walgreens, this is breaking out in the process. Looks like it at least. And I do believe that you can ride this up towards 37. Not a huge move, but this is a company. It's not going to make you a ton of money, but it's not going to lose you a ton of money either. So it pays a very small dividend. I mean, maybe 3 or 4%. Nothing to get too crazy about. Wendy's, I can't say that I know a lot about Wendy's, the fundamentals. I knew they spun off their Arby's, sold it. I think that was a great thing for them. And I do believe it's setting up for an opportunity to get long Wendy's anywhere from $5.50 down to $4.60. If you can get involved at those levels, I think over time, over the next year or so, you'll be able to sell it up towards $9 or $10. And this $5 level matters. Not only is it the point of control for the last year, but $5 is, most people don't trade, most big institutions don't trade under $5. That's something to be aware of. ConocoPhillips, I do believe this is breaking out. When you think of ConocoPhillips, think of crude. Crude's breaking out. We have new highs for the year. And I was telling you, be aware that crude, although it broke down January's point of control at the bottom of the range, that's usually a recipe for a move higher. It moved down. I said watch for the fake out. This could easily bounce up, especially if it bounces and we hold, these lows, generally speaking. What does that mean? That means that this down move is completely rejected, and now you have support where it broke down and easily a breakout to the upside. This happens very often, and it's something to be aware of, especially on a commodity type of instrument, say oil, gold, silver, whatever. If there's any reason to be bullish, or I should say, if there is anything to be bullish on, I still think it is commodity prices. It's continued to prove it right to be long commodities, and that's important. It's important to understand your thesis, make sure your thesis is right, and backed by the price action. And right now we're getting that with oil. I'll go into the dollar now, and I'll make the argument for why the dollar can go higher and lower. First things first, why it can go higher. Well, just from the yearly chart, we're bouncing off this point of control, or I'm sorry, this value area high for the year, and it's the bottom of the Donchian channel. And let's face it, we're in an uptrend on the dollar. Last time it hit the bottom of the channel, you wanted to buy. Here we go again. You're getting buying. Bringing in the 30-day chart, you have 2 months in a row point of control at the bottom end of the range. You can see on Friday, we were holding February's point of control, holding the 30-day point of control. I do think this matters. Unfortunately, I do think it's raises the possibility for a sell-off in equities. The euro, opposite of the dollar, you have a downtrend. Every time it's at the top of the channel, you've been wanting to sell. And you're looking, basically, if you're going long the euro, you're looking for a reversal. Bringing up the 30-day chart, it's clear that we've had a very nice bounce off of these lows, and it's right back at the point of control for February and in the last 30 days. Now, the point is, if we plan to move higher in the markets, you're going to see the euro catch a bid. It's going to move back to the top of the channel, and you're going to want it remain in the top half of the top end of the channel, and that will be a recipe for a move higher. Unlike the dollar, you want it to do a little bit of the opposite. You want to see it move back down towards the lower end of the channel, stay there, and then eventually sellers push it down through those levels. Gold, point of control for the year at 1722-ish, 1730, that $8 range or so. For the last 30 days, we're getting this bullish wedge pattern. I can't say that the gold market's going to continue higher, although I'm a believer, and I do think it will. We'll see if these lows from Friday can hold. The main low to watch is Thursday's lows. If those hold, we should have no problem pushing higher in the gold market. Silver does look a little weaker, however, it's consolidating at lower levels, or I should say lower in the last 52-week range, which gives you a belief maybe we're close to a bottom at silver. What I'm looking at here, and this is just through casual perception, I see a potential inverse head and shoulders pattern. All we are missing is the right shoulder and a breakout to the upside. I would look at this value area low, $31 or so, as a potential level to get long. However, these lows kind of looks like gold, but these lows in silver, we'll see if they hold. If they do, I think the most important thing is if we can push above the point of control for the year. This does look like a topping pattern on the on the intraday 30-day chart. We have a breakdown, and then a higher or a lower high off the point of control for February, a push down. I do believe that's a recipe for a top. However, I'm not going to jump to conclusions yet. I did have a short position on silver. I took it off for marginal gains, very small, and just gonna wait until the defined trend comes along. Natural gas, probably the reason why Chesapeake and Devon Energy got such a nice bounce. It's been up big the last few days, the last 2 weeks or so. It's definitely been consolidating sideways. I'm looking at the 90-day chart. I'm bringing this up just to show you that even for the last 30 months, we have point of control support for the last 90 days at the very bottom end of the range. That means that the likelihood of natural gas moving to $3 is pretty high. On any pullback, you would want to see buyers, and you definitely want to see this $2.50 level hold. If not, then it's probably a resumption of the downtrend, or at least a test of the lows made back in the end of January at $2.23. So, one more sector I want to cover, the XLF, just to cover it. Continues to work its way higher. We definitely have resistance, volume resistance, $15 back from June, July, and the breakdown in August. You have a good amount of volume. Now I'm assuming a bunch of that volume sold down at these levels. The most important factor about this last year is you have huge volume down at the lower end of the range. So with that said, any weakness on XLF should be viewed as a buying opportunity. And the reason why is because you can easily define your risk. Bringing up I brought up the 90-day chart again. February's point of control, we're trading above that. However, if we do start to trade below it, make lower highs, you would look for a sell-off. Your target would be $14, and then from there you would look for a target of $13 to the downside. Hopefully, though, we continue the upside. So, anyways, pretty long video, but it's good to be back. Take care, hope this helps, and continue to trade well.